let's begin with the first and the most important news on our bulletin today. There's big news for data privacy in India. The government rolled out rules under the Digital Personal Data Protection Act yesterday on the 14th. Some rules kicked in yesterday, but others will phase in over the next 12 to 18 months. A new 4-member data protection board will also be set up to enforce them. But what does this act really entail? And what does it mean for you? To help break this down, I am now being joined by Mayuran Palaniswamy from Deloitte India and Supratim Chakraborty, partner at Khaitan & Co. Welcome, gentlemen. Thank you so much for joining us. Mayuran, let's set the stage by asking you, with a very straightforward question rather, what does this mean for the common man? Do we need to be more careful, or can we now be rest assured about data privacy?
Thank you very much for the question. I think you started the conversation on the right note. It was a very big thing for all of us, right, as consumers in India, to have our own regulation for protecting our own personal information. So I think this is a significant power dynamic change, right, from organizations to the consumers, right? I'm sure the regulation is to kind of make consumers more powerful. While we had the privacy as a fundamental right for many years, I think this is the very first regulation which is going to emphasize further on that or give a stronger view around that. So what is it matters? I mean, one is that this gives a lot of transparency. The organizations have the responsibility and accountability more transparent to the users. They have to clearly mention what sort of information they are gathering, what processing are they doing, how long they are going to retain, so on and so forth. Second, through the rights which has been called out in the rules as well as Act, as an individual, as an end user, I get better control over my data. Right? I can ask organizations about what are they doing on my data, what is the kind of controls they put in place to protect my data. And if I have to delete the data, I have all the rights. I can nominate somebody to be taking my data further, so on and so forth, right? And it also mandates the organization to establish a channel for grievance redressal. So, I mean, there was a situation when there's issue around data processing. We had no one to go and talk about. Now the organizations have to establish a mechanism in which I can reach out to the right authority within the organization and who are accountable and responsible to provide me the what are the solutions they want to provide, right? And if I'm not happy as a consumer, I can withdraw the consent. I can ask the organization not to process my personal information anymore. So beyond that, gone are the days where we were not aware of what is happening when it comes to breach of our data. Now the organizations have to inform us well in advance before it goes out to the authority or to the media if there's any kind of data which is pertaining to us has been lost, and what will be the impact to us and what's corrective action we have to take from our side. So overall, in a nutshell, I think this is putting the consumers in the driver's seat when it comes to their own data.
In the driver's seat, as you highlighted, more transparency, more control, better grievance addressal, and right over usage of data. But this is where Mr. Chakraborty's view becomes important. Mr. Chakraborty, I'd like to ask you, how does the DPDP Act define personal data? And what exemptions for government agencies, such as for national security or public order, might raise concerns about overreach?
Right. I think the definition is fairly simple. And for our audience, I think we should just make it even simpler by stating that any information through which you would be able to identify a natural person would be your personal data. Okay. A simple example could be, say, my email ID along with my name, right? supratim.chakraborty@khaitanco.com would be a clear indicator of who this person is. But if it is admin@NDTV Profit.com, for example, it would not signify who the natural person is. Coming to the second part of your question, Malika, yes, there are rights given to the government under this law, as in many other laws, where they can seek information. And there's a lot of talk which is going on around this, but I think the way to look at it is that it is not unbridled right. Purpose limitation is a very big thing for data laws across the globe. And if you see this particular law as well, there are clear purposes which are mentioned, number one. Number two, the authorized people who can allow divergence of that information, that is also mentioned. I'm sure that this will become better and ripen over a span of time. But to start with, I think we have a great law in place which should set sailing with this.
Okay. But just to follow up, very quick actually, I'd like to know what was the legal landscape of data protection and data privacy in India before the rule came in? Was it, I mean, I'd like to understand, were the lines really blurred and does it provide more clarity now?
Oh, excellent question. I think so. So, firstly, yes, we had laws, but this was a patchwork of laws, I would say. On a sector-neutral basis, we still have the Information Technology Act, and then there are a couple of sections there. Okay, one section which deals with only personal data is extremely bare-bone. It says that if you are disclosing personal information that you have procured pursuant to providing of any service, you need to do it as per the consent taken or as per the agreement that you have entered into. That's absolute low threshold, I would say, right? There's nothing more than that. Then there is another section and a set of rules on sensitive personal data. And what it says is that if you're handling sensitive personal data, then there are, requirements pursuant to, for safeguarding of the data, for transfer, disclosure, etc., etc. But that's just a sort of minuscule set like biometric, financial information such as debit card, credit card number, or say health-related information, etc. All the rest of the data had barely any protection. So yes, it's a quantum leap for India, and we are going to have the gold standard, if I may say so.
Okay, okay.
Aside from that, let me also add, of course, there are sectoral laws which has always been there and will continue to be there, like the Reserve Bank of India gives diktat to banks and NBFCs, or IRDI giving diktat to insurance players, so on and so forth.
Mr. Chakraborty, I will explore that point because I wanted to first understand the definition of personal data and what the landscape has been so far. But Mayuran, I'd like to bring you in. According to you, the DPDP rules need teamwork between regulators, businesses and consumers to work well. And you said that companies must spend on new processes, tech and training to comply with this. Could you explain the significance of the collaboration that you were pointing at?
Yeah, so I think the collaboration is a fundamental layer, right? If you see, as an organization, right, I need to work with the regulators very closely to understand what are the nuances of the regulation, right? I know that, or we all agree that this is not a most prescriptive regulation, so it makes even important for us to stay connected with the regulators and understand, considering our risk exposure when it comes to personal data within the organization, so on and so forth, right? So that is going to be a little bit of a continuous journey. Second is that the collaboration between the consumers and the organization is also extremely critical. I mean, it can't be a situation where the consumers are not well educated or made aware of their rights, what is it they should be doing, what is it they should not be doing with the regulatory lenses, right? So that's why it becomes extremely critical for us to bring in 3-4 elements together. One is obviously the regulator, second organization, third is the consumers. And what is going to be the kind of a common denominator for all three is the technology, as you rightly said. So technology is going to be a significant contributor or enabler for this regulation. If you see the regulation rules around the consent is also being largely going to be sitting on the consent manager and the platform the consent manager is going to bring in, right? So that's where I think it becomes an important point where all these elements converge together to make any regulation, leave aside data protection regulation, any regulation to be successful in this country.
So, Mayuran, while you do talk about collaboration between organization and the consumer, but think about the time at which this, Data Privacy Act or rule is coming into place. It's the time when AI is right here. It's not just technological advancements, but it is also delving into the scope of AI and what it can do. I'd like to understand from you, while this collaboration is extremely important and prerequisite to secure data privacy in India, do you think it rightly also takes into account the extent to which AI can either breach or intimidate data privacy?
No, absolutely, Malika. Great question. So if you see, I know that we have big ambitions around AI. and a lot of organizations have invested significantly in AI in the last 1 year or 18 months. But I would say any data protection regulation becomes a stepping stone for AI, because enough the data which is going to be consumed by the AI may have significant personal information, which can actually lead to a lot of biases or any sort of challenges to the consumer's end of day, right? So if you just do a comparison between how it has been in India and European Union and few other regions, I think we are slightly a better off situation, because while we took time to agree and come out with this regulation, I thought that in a way has minimized our data privacy regulation, the gap between the data privacy regulation coming into play and the AI evolution, which is always good, right? On the other side, if you look at European Union, they came up with the GDPR 6-7 years back. Now they're trying to have the EU AI Act, right? So there's been significant number of years which has passed by during this period, 7 years.
Right.
So the gap is significant, right? It is going to take even more steeper journey for them to kind of bridge the gap, or might have to re-look into the GDPR and see that they have to look at something like a GDPR 2.0. So I think we are in a way well positioned that way, because the gap is minimized already,
Right.
unintentionally.
Well positioned and a strong start, I'd say. But Mr. Chakrabarti, we have 30 seconds. You were speaking about the golden standard of data privacy. I'd like to ask you, are the rules different for the small businesses and significant data fiduciaries with respect to this new law?
Yes, significant data fiduciaries is a very new, novel concept, I would say, under this law, which is if they are crunching large amount of data, etc., they would be categorized as such. They will have to do data protection impact assessment, annual audits on data. We'll have to have a DPO, data protection officer in India, so on and so forth. These are not applicable to all other players, which are called normal fiduciaries. And also there are certain exemptions which are possible for startups and small scale businesses.
So much, Mr. Chakrabarti and Mayuran, for explaining this law in such great detail and helping us explore perspectives. But that's all the time I had for this discussion. Thank you so much for lending us your voices.
Thank you very much.
Thank you. And moving on, viewers, good news for Indian exporters. The RBI has announced new rules to ease the plan from global trade troubles. Exporters now get 15 months, not 9, to collect and bring back money from goods or services sold abroad. They also have 3 years to ship goods after getting advance payments. Plus, struggling sectors can delay loan repayments and interest due between September and December 2025. And these trade relief measures are effective immediately. Let's in fact get in my colleague Vishwanath Nair to explain all of this in greater detail.
There are certain relief measures that the Reserve Bank of India has announced, and this is specific to the export sector, and there too there's a list of sectors which are eligible for these changes. As you mentioned earlier, the period for repatriating whatever payments are due for selling the goods and services abroad, that has been increased from 9 months to 15 months now. The period of shipment of goods has been extended from a maximum period of 1 year to now 3 years. The RBI has also, of course, announced moratorium on loan repayments when it comes to term loans for export credit, and also interest payments. There's a moratorium whenever there's working capital involved. Separately, of course, the maximum credit period has been enhanced for all export credit pre and post shipment of goods from 270 days to 450 days. And these are obviously all measures aimed at easing the repayment cycle for exporters. Now, of course, we don't know when exactly the trade deal with the US is likely to be announced, but this is in anticipation of that. Over the last few months, a lot of exporters have faced significant trouble because they've had to face very high tariffs from the United States government, and that has, of course, affected their business significantly. So these measures are aimed at addressing that stress that has been building up for the last few months. And of course, going ahead, whenever this trade deal is announced, then the business becomes significantly easier for these exporters.
Thanks for that, Vishwanath. Let's now turn our attention to the Q2 earnings roundup of major Nifty 50 companies. This quarter, 21 companies beat estimates, 20 came in line, and 10 missed expectations. Now, which companies outperformed, which fell short, and which met projections? Let's go across to my colleague Sharad Dubey for all the details.
Well, thank you, Malika, for that. And interestingly, this is our Nifty 50 index, but our analysis for 51 stocks. Now, you'll be wondering why there is 51 stocks here. Because Tata Motors PV numbers have also come in. It's currently in the Nifty index. Overall, 21 earnings had a beat estimates in line with 20, and 9 of almost 10, you could say, had actually missed the estimates. Also, the top earnings beat, let's point out Asian Paints, a very good strong turnaround quarter coming in, volume recovery in the decorative space. Bharti Airtel, a strong quarter coming, especially in the subscriber addition and the ARPU growth. Hindalco, aluminium upstream numbers were pretty good. That's why the operational numbers went well. And M&M, strong performance, volume growth, and across all the segments, this up move was coming in. Interestingly, Sun Pharma was also an outlier in a positive way because despite the US trade tariff impact, still the performance have been very strong and the growth drivers were intact. Let's look at the top misses. Axis Bank had a one-time standard asset provisioning. That's why the numbers were impacted. Coal India, lower power demand impacted the volume growth. Interestingly, ITC's agri-business was impacted and the top-line numbers went on the downhill. And Trent, a very weak performance coming in. The revenue growth was just 17%, below the guided range, ranging between 20 to 25%. And lastly, Eternal food delivery marginally came below expectation, but the quick commerce inventory job change kicked in, and because of that, this model change, the numbers were impacted. So this is the entire wrap of the Q2 earnings in the Nifty index.
That's Sharath for wrapping the Q2 earnings of the Nifty 50 index. But at the Visakhapatnam CII Partnership Summit, viewers, CM Chandrababu Naidu emphasized how Andhra Pradesh is leveraging artificial intelligence, massive data centers, and real-time governance to transform citizen services, highlighting investments of over $15 billion in data infrastructure. He spoke about integrating historical and real-time data, biometrics, and technology-driven communication to make government services more efficient, transparent, and accessible to every citizen. Listen in.
We are in an inspiring time. Technology advantage. I have seen 3 decades back. At that time, IT. That is only starting point. Today we are in AI, artificial intelligence age. Even in Andhra Pradesh, data centers, Google has announced $15 billion US data center in Visakhapatnam. Now so many people are coming now. That is where, if you can see, Andhra Pradesh can provide green energy and also cost-effective price. Nearly 5 to 6 gigawatts data centers are going to come here. Lot of demand. That is how things are happening. All technologies, blockchain, everything has come. Even quantum computers have come. You can see today, one example I'm giving you. My government is totally on IT driven governance. We are having data lake. Every citizen, every family, everything will be online.
It's now time for our special segment on Byju's, the rise and fall of Byju's, viewers. Let's begin. In 2011, Baiju Ravindran, a small-town teacher with big dreams, founded Byju's to make learning exciting for Indian students. His vision was simple: education for all, delivered with flair. By 2015, Byju's launched a mobile app bursting with video lessons for kids from kindergarten to class 12. It was a hit, blending tech with teaching in a way India hadn't seen before. The company's ambition soared. In 2017, Byju's bought US-based tutoring platforms from Pearson and roped in Bollywood icon Shah Rukh Khan as its brand ambassador. By 2018, 15 million students were hooked, drawn by affordable subscriptions and engaging content. In 2019, Byju's snapped up Osmo, a US edtech firm, for $120 million and earned the unicorn status, valued at a whopping $1 billion. The pandemic years of 2020 and 2021 were Byju's golden era. It acquired White Hat Junior, Akash Institute, Great Learning, and Epic, spending billions to dominate coding, coaching, and global learning markets. In November 2021, it also secured a $1.2 billion term loan from overseas lenders for global growth. But the cracks really started showing in 2022. A 17-month delay in financial reports revealed a shocking 4,588 crore loss even as revenue grew. Signing Lionel Messi as the ambassador couldn't mask the mess for this edtech giant. By December 2022, lenders started demanding more money back from Byju's rattled by governance lapses. Then in 2023, a 2,000 crore credit deal tied to Akash's cash flows and Ravindran's mortgaging his own assets kept Byju's afloat, but investor process slashed its valuation by 75%. Layoffs swept through and delayed 2022 financials fueled more distrust. By July 2024, the walls closed in for Byju's. India's courts launched insolvency proceedings against Byju's parents, Think and Learn, after it defaulted on dues. From September 2024 to July 2025, creditors and legal battles overwhelmed the company, freezing operations and draining hope. Byju's, which was once a $1 billion darling, was now valued at nearly zero. Then in November 2025, a glimmer of hope emerged. Manipal Group submitted an expression of interest to acquire Byju's parent, Think and Learn, offering a possible lifeline. But will Byju's rise again, or is this the end? To discuss this and more, I have with me Ashish Taneja, co-founder and CEO, GrowX Ventures. Thank you so much, Mr. Taneja, for joining us. My first question to you is, will edtech Byju's finally see a sunrise under Manipal Group, according to you?
Oh, so, my assessment is, yes, Dr. Ranjan Pai or the Manipal Group, they put in a bid to acquire Byju's. But the real asset is not Byju's. The real asset is Akash. And, a lot has been written about already. Access to Byju's will give Dr. Ranjan Pai, Manipal, an additional 25% ownership or a quarter in the ownership into Akash. Akash is the real asset. That's the one with a strong revenue base. That's the one which could be turned around faster with a stronger profitability. So I think the real asset which is being looking to acquire is Akash, not Byju's. I've not heard of any stories where, which kind of gives me confidence that the intent is to resurrect Byju's or rebuild the particular business. I don't think so. That's going to be part of the action. The first idea would be to take charge or have a larger influence on Akash, build that particular business up, and if an opportunity arises, look to kind of rebuild Byju's. Yeah.
Okay, you've set the context very well. Of course, the golden egg seems like it is Akash. But what, according to you, now is the future of the edtech sector in India? And do you think there could be a mix of offline and online education, or is the direction completely different?
No, I think education needs to be hybrid. So, an element of online and offline, of course, yeah. We've got one of the big names, PhysicsWallah, which is filed for an IPO, or maybe it's opened up. I've not kept track of that. So, that's a big one, to look at in terms of how the market responds, what kind of investor interest they're able to gauge. Outside of PhysicsWallah, there are a bunch of people, trying to grow in prominence. Upgrad's got a decent game. Unacademy, we've heard a few things, few positives, few negatives, those will shine. But there are a bunch of newer age models which are also coming up, right? And, cutting across all spectrums of education, be it K-12, be it postgrad, undergrad, or be it specialized courses. In the era of AI, I think a lot of that will get incorporated with the way schools or colleges, physical, introduce or leverage technology. So, I'm all in for a hybrid sort of a model. And I would imagine a lot of innovative models will also come by, over the next 5-10 years.
Okay. Interesting where you talk about you're all in for the hybrid model of education. I'd like to ask you in this context, what do you think is the future of Byju's now? When Manipal comes in the picture and takes over Byju's, say if it does happen, Will Byju's be able to sustain this rapidly expanding and competitive landscape of India's edtech ecosystem?
No, like I said, I don't think so. Attempt should be made around rebuilding Byju's, at least to start with. The focus need to be, Akash is a better name today. Akash is far more recognized. They have a standing over the last couple of decades. The idea needs to be strengthen that particular foundation. And if at all, there are assets available within Byju's to be rebuilt, the focus needs to be, think of it as a startup again. It's a fresh start with a lot of baggage. Find a couple of niche opportunities, build a team around that, and focus on rebuilding, recreating a brand, and more regaining the lost credibility and trust around that. So start small, gain confidence, gain consumer momentum before you kind of go, and dream big.
Okay, well said, Mr. Taneja. Thank you so much for giving us your perspective on Byju's future.